Welcome to Butterfly Effect Lesson 2. Let's jump right into it, piggybacking right off our discussion in time and just some kind of final wrap-up points on time. I'd like to do a few wrap-up points throughout each video here. The previous lesson on time, it's such a critical way to change the thinking that you do with charts, realizing that everything is controlled on the charts through these data points and vertices that cycle against each other into these points of explosion really should help you understand polarity at a much deeper level. And really the core way that these charts work. So understanding time and the way it affects our charts and can really, we can look at things differently now. Now we can kind of open our minds to understanding that everything is decycling against itself. And it's a mathematical formula where we are removing points on the chart to get to kind of these impact moments or explosion or implosion moments. So very cool kind of dive on that. Now we're going to get into the 3 lanes of day trading. This is something that I created and it's the way that I see day trading works. And it is something that I think will be used in the future of day trading for a long time to come because it really talks about day trading differently than what most people would expect. And we're going to use a blank graph to illustrate this today. So it really talks about day trading in a very, very different way that I think people are really going to resonate with because there's a way in which we can analyze the charts differently. Again, Butterfly Effect 2 is an extremely advanced set of knowledge and criteria. So we need to make sure that we're looking at things in a very different way and not so basic anymore. Although Butterfly Effect and my other work isn't basic, this is just one tier above. So if you haven't yet from the last video, like this video, like the last video, subscribe to the channel, watch all my other courses, do all that good jazz. I have to plug the video and the channel. So that's done. Good. Been there, done that, done. Okay, let's talk about the 3 lanes of trading. Trading works like this. You have technical analysis, which is your TA. We're going to make this a nice, bright yellow color, readable on the screen. Okay, you have technical analysis. And you know what? Let's maybe make this a little bigger here. We're going to go technical analysis. This is kind of the overarching umbrella of what we do. Technical analysis, as we know it, is what all the levels we mark. We call it technical analysis and we kind of walk away and leave it at that. And then there's that other thing that we do, mental analysis, which is another big, huge point. But we're specifically talking about the 3 lanes of trading today. So technical analysis has always been looked at as, oh, cool, we do technical analysis. But we now introduce procedural analysis and we're going to color code these differently for this video. So, okay, sure, let's go purple here for procedural analysis. And now we're going to do another one, and that's going to be risk assessment, RA. So here's another Easter egg. We're going to continue to release Easter eggs throughout Butterfly Effect 2. If you think about RA, I released a guide on risk assessment. That was always meant to be the bridge between Butterfly Effect 1 and Butterfly Effect 2. So if you actually think back to the end of Butterfly Effect 1, you're going to have, I believe it's lesson 70 and 71. They're called risk assessment. Butterfly Effect 2 for years and years and years was planned out. All of the materials planned out for years ahead of time to be a very specific chain of releases that would really allow people to understand one lane into the next. For example, you'd have to learn procedural analysis before you could learn the next piece, which is comparative analysis. And we can mark that before we continue this conversation, just so we have the reference on the screen and we can make this one. Yeah, we'll go pink. Pink is a good one. So in creating all these different layers in trading, like creating procedural analysis, PA is something I created. Risk assessment, RA is something I created. CA is something I created. These are the 3 lanes of trading. Now we're going to talk about this because procedural analysis, you would have to understand procedural analysis before you could understand comparative analysis. That's why I released Blueprint first before Butterfly Effect. And in order to understand procedural analysis, you'd have to understand TA at a deep level, which is why I released Future of Trading before Blueprint. So TA is actually Future of Trading. You're learning your technical analysis. While you finish Future of Trading, one of my first courses, you get right into Blueprint. Blueprint teaches you procedural analysis. You finish procedural analysis, you learn about comparative analysis. Once you learn about comparative analysis and that's done, before releasing Butterfly Effect 2, I would have to release a risk assessment guide. So if you think back to the end of Butterfly Effect 1, which is really neat how I was able to kind of craft all this stuff out over time, right at the end of Butterfly Effect, I talk about risk assessment on lesson 70 and 71. 72, 73, and 74, the last 3 episodes, or the last 3 lessons, and I might be off one number here. It might actually be up to 75, but I can't quite remember. If you think about those were kind of like a peek into Butterfly Effect 2. So really Butterfly Effect 1 was always supposed to stop at risk assessment by design from 0. And then between releasing Butterfly Effect 1 and 2, I would have to go and make a complete risk assessment guide to make sure people understood that there were 3 lanes, and it's why we're talking about this right at the beginning of Butterfly Effect 2, because we really have 3 lanes in trading. So let's talk about what each one of these lanes are. No, we want to keep that. Oh no, you can't Control-Shift-Z in Trading View. We have to redo this, which is fine. We're going to go here, and it's not fine. I'm actually very tilted and upset. Not really. Completely kidding. So let's get rid of this. And now we're going to be talking about how it actually works. Technical analysis is what we do at a broad level. It's the very first form of day trading and what it was. It's marking levels. It's understanding things like time. It's kind of the piece that it kind of ties everything together. So at the highest level, technical analysis is the very first step into this, and that's future of trading. Blueprint, which is procedural analysis, is everything that happens before a trade. So the execution layer of trading, which I may or may not remaster Blueprint in the future. I like to do remastered courses because it's a really good opportunity to just keep the material more concise, brevity, and fresh. More to the point, as I'm getting better as a content creator over time. So as I say this, I'm messing the words up. I'm better equipped to deliver these messages with brevity in a quicker, more concise fashion. Not now, apparently that's broken. Thanks, brain. So let's talk about procedural analysis. This is everything that happens before the trade and exactly why you would have had to learn it first. You have to learn how to mark your technicals before you can enter the first lane of trading, which is procedural analysis. This is everything that happens before a trade. So in a trade, you have something that looks like this. Before, so this is marking levels, this is bankroll management, this is active and passive accounts, this is everything that you would do before a trade happens. You have comparative analysis, which is everything that happens after the trade exists. So this is your second lane. So if you were to mark levels, which would now be a part of risk assessment, you would have a target gets hit, bounces, and creates the comparative architecture where you're comparing the current events of what happened to the moments where you've assessed the risk. So if you were to, say, create a hold level here, because you had like this little kind of valley, you could create one here and you could create one here. That would allow you to say, oh, this has to hold the move up. Therefore, if it went down and attacked the move like this, you would actually create a trend, comparing 2 events against each other to better understand if moves are in succession or failure. So this is comparative analysis. It's comparing the architecture of the chart against each other after the moments a trade executes. So when you go back and think of it, procedural analysis is what happens before the trade, which is one lane. Risk assessment is how we assess the risks of every trade while it's happening. So before a trade, during the trade, and then comparative analysis is after a trade. So these are the 3 lanes of day trading: before, during, and after a trade. So we can kind of talk about this a little bit and understand this a little more. And we will be going through risk assessment all throughout Butterfly Effect 2. Because I just introduced RA as a layer for people for day trading, don't feel so bad if you're not quite fully grasped on risk assessment, as it will come out and I will be using a lot in Butterfly Effect 2 throughout this course to further refine that understanding of risk assessment and how it works. So let's kind of talk about what would happen here. You get ready for a trade and you mark your levels under the context of procedural analysis. You think of things like, where can a trade go? What levels would I mark? What is happening before the trade actually happens, right? Like what are the events that PA dictates before a trade? So that's the first lane. You manage to find all your levels because your PA is good, right? You found all your levels. So let's just use the actual level tool and mark a bunch. And we're going to just assume they're all one color here. That's perfectly fine. You know what? Let's do it the proper way. Let's do this the official way, right? You got a 4-hour level. You've got a 1-hour level, just like we looked at in the last video. Maybe we have also like a daily level, and that's fine. Oops, that's okay. We can do that, and we can just change this here and here. And you have a bunch of risk assessment that you've done on this trade. You also maybe have like a 15-minute level, so you're going to mark another one and maybe make it a 15-minute level. And so your procedural analysis would allow you to mark all these levels out. Your risk assessment would allow you to go into each one of these levels and say, okay, how much risk is associated with this level? How much risk is associated with this level? How much risk is associated with this level? And it would really allow you to find the best, most accurate point to enter that trade. So you'd be looking at all the different vertices and possibilities and what could create polarity. And even if this might not even be a polarized moment, this may just be a subgroup of risk that you have from a larger, more bracketed group. Like you have a weekly level up here, and that weekly level is your 9 out of 10. And then you have a monthly level up here that's a 10 out of 10. So this one here is a 9 out of 10. This is a 10 out of 10. And inside this 9 out of 10, maybe you have a subgroup of all these other levels. So really you're hitting a 9, which technically isn't the most polarized point, but you're going to the deeper parts of that 9 because it just refuses to kind of hold. So your risk assessment is you mark your levels with PA, and then you assess the risk against them with RA, which allows you to enter the second lane in trading. So the first lane allows you to mark levels, which is procedural analysis, everything that happens before the trade. Risk assessment allows you to understand the risk associated with each trade and the values. And again, go watch the risk guide if you haven't seen it yet. And if you have seen it and you're still kind of murky on this, don't worry. We're going to do lots of RA work throughout the course of Butterfly Effect too. Risk assessment would allow you to enter the trade and understand what is the smartest decision during the trade, right? Again, before the trade, during the trade. And then once that RA establishes, you use comparative analysis to see where these moves are. I created a valley here. We're moving up so fast. You come straight down. You create a trend. Maybe there's a little 1 minute here that acts as your shield or your trigger point. And you continue moving up using comparative analysis, which is comparing the events of the trade after you're in it to best manage it. So really the 3 lanes of trading. Technical analysis being the founding part of day trading, which was the very first form of what we had based on the creation of time. The first layer of trading, what happens before, the anchor or the ground level of this entire house, which is risk assessment, which allows you to assess the risk of every single trade. So you've got your first lane procedurally, your second lane risk-wise, and your third lane as the comparative analysis of any single chart. Boy, that's a mouthful, but that's your 3 lanes in day trading. And this is really important to understand because it allows us to better define where we are strong, where we are weak, how trades are actually supposed to look at a highly professional level, and really gives us the tools that we need to take trades and not just mark levels and kind of hope for the best, right? This is the foundation to a ton of the material in Butterfly Effect 2 and the way people should be trading in a 3-lane system. Gone are the days where technical analysis is so simple of just drawing a line on a chart and hoping it hits, crossing your fingers, and not being able to explain why. We live in a 3-lane system in day trading. And the cool thing is it's an infinite loop, this 3-lane system, which just brings us into our next point. Day trading looks like this. You have a range here and here and here and here. And you create this infinite loop of going to a target up top, falling all the way to the bottom, going to another target up top, falling to the bottom. Now these may be shortened and you actually may be like this instead. And your ranges are, kind of diminishing against each other because your Pandora's boxing or some other thing. So your ranges look like this, and then you bottom, and then you go up here and scoop to the top, and you hit the bottom, and you kind of go back and forth. Now this is a cue of continuously going through PARACA, 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 because it looks like this before any trade, and this would be the same as this. These are both calls to risk assessment. Targets on the top are the same as targets on the bottom. Whether you're longing or shorting, it doesn't matter. You're assessing the risk at the levels that you are marking. So you are saying, I have oopsies, let's go back and put that one back. We can't. That's okay. You're saying if you are moving up in this moment, can't zoom back out far enough here. Okay, so we're gonna maybe just go do this on the charts. Let's do it live on the charts. You know what? That would be very cool. Let's do it live on the charts. Let's drag these 3 guys down here, PARACA, and we can move TA down there. And because I'm super anal, let's delete our brush strokes because those will, at some point in the video, they'll come back to haunt me. I'm telling you this right now. So let's just delete those. Forego all of that. So we're going to go here. Okay. Let's back it up even one more. Let's actually go right. Where's my replayer bar? Oh, lost it. Okay, right here. Good. Let's go right here. You'd have a target on the top. That means if you were to flip your chart, just like you were catching a falling knife, you would have your target up top, which would be procedural analysis. You need to sit here marking your targets up top. Just like back in the day when I called that 64-6 top, I'm calling out targets from the top and I'm thinking about what makes the best target on top, right? And you're using procedural analysis to best understand those targets. Next comes risk assessment, right? You add the assessment of those levels being hit by risk. How can you best take those events and categorize them in risk-wise? Once that happens, right, we can kind of go forward. We haven't hit it yet. Let's find the top here. We risk assessed 64-6. Perfect. We nailed that one from back in the day. Procedurally, we found the target going back 3 and 4 years ago when I called the top, or the 2 years ago or whatever it was. When I called the top at 64-6, we We assessed the risk, 64.6, that's close enough. And we took the trade, risk assessed it as the best part of the move. And now we are in a moment of comparative analysis where we are comparing the events that have happened here to allow us to say, hey, here's, maybe a weekly level right here. And we can just kind of change this to the correct color code. And then, maybe even finding another target in here. Yeah, sure. Looks good. Daily right here. Perfect. Looks good, feels good, seems right kind of thing. And, one right here. So just kind of a few different ranges, just very simple stuff, right? Not getting too complex with this. Very simple stuff, looking at what can happen. Now we are comparing the events of the current piece against that. So if we were to go here and press play, let's see what happens. Go up to that weekly level, go up to that daily level, fall down. So in that same regard, you would now be entering this infinity cycle where if you were back here, no, we don't want to exit that. We want to just trim it back to here. If you were right here, you would now be using your comparative analysis to find targets on the bottom. So now once comparative analysis triggers, it goes away. You're now doing procedural analysis to find where your risk assessment moments are on the bottom side of the chart. So then when we called that 29.2 on the bottom, which was, I don't know, however many months later, 29.2 right there, we can just mark that. We were assessing the risk of the different levels using procedural analysis because all we were doing now, flip the chart on either side. We're entering an infinite loop of before a trade happens, PA, RA on the trade, and then it goes into CA to see the events that can occur. And as soon as CA completes its job, you're going back into PA, find the event on the bottom, RA in the moment, let that establish a trade, you're going into CA. So you had PA here, RA here, CA here. The CA then converts into PA because now you're analyzing the bottom side of the chart again. And you're saying during the trade execution, RA will take over and CA will come back. So it kind of goes in this cool transformation where PA starts here, it goes back to here, and then eventually it'll go here because PA is used to find targets on the top side of your chart. It's the lane that trading exists in where we are marking things out before the trade happens. And then so we can hit play and you'll see when RA kicks in and just hit play here. Go down to the bottom. That's that famous 29.2. Here's a 64.6 that I called. Here's the 29.2 that I called. And I did this stuff all live on stream. So if you guys are really interested in that, go look at my old replays on my VODs channel. It's all there. Or my TikTok. I have all that stuff posted up there. And then so you're going in this really interesting queue where PA is everything before a trade, during and after. And we could even go to a current time frame to explain this, like what's happening with Bitcoin today. Like where would you do PA? Where would you do CA? Where would you do RA? Right? So you could just kind of go here. And, look at Bitcoin right now, start just going down into the range, right? You've got a daily range right here. Go find the 4-hour part of that daily range, right? The 4-hour piece would be right here. That's the 4-hour piece that's already been hit. Now, where would you go next to find that next piece? You go to the 1 hour, just kind of go down the trail of events here. You've got the 1 hour right there. Do you have anything even smaller? Do you have an even more polarized point of this chart, right? So you could just, I don't really feel like going back and forth, so we could just kind of try to go find the 15-minute, and you would find that here, and you have something even smaller. I don't know. Let's check. Yeah, you got a 5-minute there. Looks good. Disconnected from its backside. It's not sharing the same candle, so you've got a backside frontside combination there. It's actually not a combination. Let's not use that term. A combination level is something we'll talk about in the future. Take your replayer tool off. You probably have a pretty precise moment here. Yeah, what would hold the chart up? So if we were to kind of take this replayer tool and reassess this event before it happened, or this, this point of where it happened. And you could even be back here into some kind of reverse level. You could be in all sorts of different criteria. Not really the point of this video was to go and find the exact levels, but just to show the exact way that this PARACA 3-lane system works. Like here, you would be doing your lovely friend PA. Where's our PA? I think he's gone. I think he left. I think he got fed up with our crap and he left. He got out of here as quick as he could. So we got to kind of clone him. Okay, so we're going to do some kind of cloning here. We're going to make a new PA, right? Okay, we got this. We got to put cemented issues or something so we can't run away next time. I don't know. We got to do something about this because it's not really exactly what we wanted to see. So you got PA. So you'd be doing PA here to do understand all of your levels that you would be looking at down below. So anything that we're not using is going to go in the corner right now. So PA, we're marking that as we come closer to the level and we are assessing what part of the trade we want to take. We are introducing RA, right? Our friend RA comes in, haven't hit our level yet. Oh no, we missed our trade. That's too bad. Okay, we hit our level in this moment. Now we would be using CA to say, okay, PA is no longer in use. RA has done its job. We've risk assessed the move. We've marked all our moves. We've entered the first lane of a trade. The second lane is we marked all those things out, risk assessment. Now we're going to use comparative analysis to see these events now. So let's see what happened in this chart over the course of a day here. So you hit this level here, right? Let's just start marking some time frames. You got a 1 hour level here. Let's take this guy off so we can just get that clarity. We're going to go to mark this as an hourly. Go to the 15-minute chart. Inside that hourly, we had a 15-minute, and you have probably the highest time frame here. You have a 15-minute hold level, simply holding up the chart. Again, if you don't know what these terms are, go watch my older courses as they go through them. You've even got a 5-minute level deeper than that. So you've got a 5-minute level wick or body. It doesn't matter. A testing of a level is a testing of a level. So whether you test the wick or the body, it's all the same. It's the same level being tested. So wick or body, it doesn't matter. Let's be very straightforward about that. You could go down further. You've also got the 3-minute being tested here, so that's perfectly fine. And probably the 1 minute, which is your classic combination level where you're testing multiple levels at once. And we'll go deep into that, more in the future. But say if you were to test a 1 hour level, and then you could find the moment inside of that level where, well, this wouldn't be it. What about the 15? Could you have a 15 combination level here? You could, because you got the front side 15 here, and deeper inside of that 15 range, you could also touch that 5-minute, that 3-minute, that 1 minute all at the same time, therefore creating combo level. So in this moment, you were using comparative analysis, right? Got to find that good old CA guy, bring him in. Let's bring these ones a little closer so we can go deeper into timeframes here at the front. Oh boy, where's PA? There he is. There we go. Now we can kind of drag these all in. You were in this moment, let's zoom in. Comparative analysis was being used. Risk had already done its job, and procedurally, you were able to mark those levels. So risk done its job by seeing which level was a smart level to buy. Now, comparatively, we're using the events that were created, and we can add trends in there too. You can add your trends like so and like so. This is a 5-minute time frame, so we're 15 minutes, so we're going to use dark gray. This might not be great for the video, so I'm just going to use white. Then you can do your comparative analysis here and start, marking these levels like this and like this. And say comparative analysis wise will tell you where you can enter next, whether it be trend or whether it be levels. And once that's done, you're now going to enter a queue where CA, can we get to it? We might not be able to, it's too far. No, it's down here. Whoa, bring these back up. CA will now eventually convert into PA once CA has done its job and stabilized the move. So we can kind of just hit play here. If comparative analysis has stabilized its move, you're now going into a queue, and there's the trends, right? There's the trends getting hit. You're now going into queue of looking for targets to assess on the top. So CA has done its job down here. It's done. You now enter PA, and when those moments come for RA reasons, you could just go and do the same thing and do risk assessment on the moves. Highest time frame, hold level here, right there. You've got your hold level there. You could even go to the 4 hours, see if there's a 4-hour moment. There is. You've got a backside four. So now you could use combination levels. Again, we're not going to get into that. We'll get into it much later. But you could use a set of combination levels to understand that 4 hour has other moments inside of it here. So we're just going to maybe mark the 15-minute level here. That one was already tested. So possibly this one. And if you were to go back to the hourly, is this inside the hourly? No, not really. So I'd probably just use that hourly there for a target. I would just use this because it really does need to get over this. This one was already tested. And now you're kind of like right here. So that's the way your 3 trading lanes work. You have an infinite loop of doing PA into RA into CA. So PA until you hit your target. That turns into RA. Once that's established, you're using CA to compare the events and the architecture of the chart. Now you're doing CA. When the trade establishes and stabilizes, you're now going back into the lane of procedural analysis, doing PA to mark those targets. PA, you're getting close to your targets. And now you're doing RA, CA, PA, RA. This is sounding a bit weird in my head. I don't know if it sounds weird for everybody out there, but it's sounding weird in my head. So I'm going to stop saying PA, RA, CA. It's like I'm doing some kind of weird Clontonier chant. So that's like the official Clontonier chant of the future, RA, PA, CA, right? So anyways, moving on. This is the 3 lanes of trading and how it works and what it looks like to kind of dissect how we would look at trading in a more advanced modern way where we can really have a higher level of control over our charts. Because really the idea of technical analysis only would be like only ever using future of trading, right? It's just simply marking levels and hoping for the best instead of actually creating something of a system. And, you date back to another one of these Easter egg moments. And, I created procedural analysis way back when Blueprint came out, because it would be the first lane that people would enter. And then if you were to create procedural analysis to eventually allow people to understand that there's an architecture that develops on the chart, which is comparative analysis, you would be able to then create the layer before and after a trade. And then you would have to understand how comparative analysis works before you'd even start doing RE and risk assessment, which is why somewhere between Butterfly Effect 1 coming out and then Butterfly Effect 2 coming out, I released a pretty big risk assessment guide. So that is going to be a crucial component for everybody to go and watch that risk assessment guide. And that's the bridge that was created. And the exact reason why risk assessment at the end of Butterfly Effect 1 was placed at level 70 and 71 or 70 and 72, whatever it was in that 74 or 5 lesson slam dunk of videos, that series of videos. The end of Butterfly Effect 1, risk assessment always had to be last, because before I released Butterfly Effect 2, I always knew I'd have to release a risk guide, which became the bridge to understanding the beginning of Butterfly Effect 2, which just goes back to the beginning of developing Butterfly Effect 1, because I realized at the beginning of Butterfly Effect 1, I'd have to introduce risk assessment at the end of it. And before even creating Butterfly Effect 1, I realized risk assessment would have to come after comparatives, which then dates back to Blueprint. So there's kind of a history there in the way I release my material, and why I do this stuff has been planned out for years and years and years. And the next kind of courses to come out are also planned in that way too. The next pieces of day trading and how it kind of works going forth in the future. Because Butterfly Effect 2 isn't the last course. It's just going to be the best, the most current piece that I'm releasing right now on my journey of how much of this information do I want to release to the public, right? And only time can tell, because I don't even know yet. We're going to see how much I actually decide to release to the public. So, maybe we'll see what I decide to release. But anyways, this is a really great lesson and understanding on the 3 lanes that we have in day trading, procedural, risk, and comparatives, and the way it kind of works, and the integration of time and how all those things work. So now we're really starting to get a great big understanding of these charts and kind of the way these things are working, with understanding time and the nature of decycling, and now the 3 different lanes in which day trading works. So these first 2 lessons should be a major shifting point in the way you look at charts, because we are breaking you out of an old model of yourself, an old mold where you were once upon a time marking levels on charts and just kind of taking what makes sense, or marking these things and saying, oh, hey, cool, I can mark levels and I hope it kind of works out, and there's kind of no further consideration. We're breaking you out of that version. We're upgrading you. New robotics, new mechanics, whatever you want to call these upgrades, right? We're giving you a new set of life here with this, because this is now understanding that there's a deeper science behind these charts that has to do with time, and everything is decycling against each other. And now you understand which current kind of hemisphere you are in the trade. Are you before a trade in procedural? Are you in risk during? Are you after in comparatives? And are you at that point where you're with procedural? And then in the next lesson, I am going to go into a deeper dissection of risk assessment, procedural assessment, and comparative analysis to best show people how they can use RAPACA to understand how long they're supposed to be in a trade, how many trades they're supposed to take, and how much leverage they're supposed to use. So now we're going to be going into a quantity, quality, length model. So really cool thing that I created a long time ago, and really allows you to see how much leverage you should use, the reason why. We'll leave it there. Quantity, quality, length, bigger dissection of RAPAC in the next lesson, and really a part of the first core set of upgrades that you're getting in your technical analysis journey, which is really understanding the charts at a deeper level to make better decisions. Before we get into introducing new terms, we have to do a little bit of catch up here. So yeah, until next time, see you in the next video.